Welcome back, everybody. Pre-CPI market analysis. This morning, I have quite an interesting view on price action, specifically on the dollar index. Looking at this daily chart, we can see that yesterday we traded up into this daily order block. We rejected that. Candle's body closed below this order block over here, showing rejection. Lower prices are in play. We open up, we traded down today, we traded into this daily wick consequent encroachment as well as this weekly inversion high. Now, this is pre-CPI 8:30. We're expecting this news release. Now, looking at this daily chart, we have this old low of Friday, 3rd of May, 2024. And then we have this fair value gap that's still left open, which we still have liquidity below this tail of this candle, as well as this fair value gap. So we have this liquidity still left in play. Now, with this idea in mind, it becomes quite clear that price action looks very bearish on a higher time frame. However, let's jump over to the Nasdaq. Looking at NAS, we traded into this daily inversion. We rejected that. We traded off higher. Yesterday, we tapped into this daily inversion. We rejected that. We took out this high as well as this one. So relative equal highs were cleared. We have daily equal highs in play above us, which is going to be the draw on liquidity. And then we are also inside of a daily inversion level, and we're sitting right at this consequent encroachment of this level. Let's jump down into a 1-minute chart. As we can see, we have been holding around this consequent encroachment level. Quite coincidental, isn't it? We've been holding around this level. Let's jump over to the dollar index. And dollar index has been trading inside of this, the high of this weekly inversion, as well as this daily wick consequent encroachment. We tapped into it, and we have pulled back off of this level. Now, looking at a 15-minute chart, this is where it gets quite interesting. We can see that short sellers were taken out of the market on Tuesday. They got taken out with this CPI news release, and price continued running down lower. And it has been continuously trading off lower. So now we have the idea in mind that we want to be short sellers and we want to target that remaining liquidity left in this fair value gap on the daily chart of DXY below that candle's low. But when I look at this chart, I see that we have been trading down. We're sitting sideways. So to me, short sellers have been profitable here. So all the liquidity is going to rest right above us in the form of this 15-minute, these equal highs as well as this one, as well as this little small remaining gap, there's going to be liquidity up there. Let's switch over to NAS and let's look at this same idea. Now, take note of this daily inversion level and look at we are at the consequent encroachment of this daily inversion fair value gap. Take note of that. Look how we, again, the same idea. We took out these long holders on Tuesday with that news release and we continued rallying up higher. Now, if you look at this pattern, this is a classic bull flag retail pattern, right? So if I focus on bearish dollar index, which would be what we would expect, and by the way, on the NAS, we would be looking for these equal highs to get traded to next. So if we look for those equal highs to get traded to, if dollar would then be bearish, I just don't see price out of the gate going up there and giving us higher prices. It's Wednesday. We have the CPI release. I expect price to give us a reversal and perhaps look at trading below these lows. Let's go ahead and let's switch over to US 100. I've got it all marked out over here. If we take a look at this chart, price was trading higher. Let me just correct this. A gap should be right there. There's a 15-minute fair value gap. So we took out these equal lows. Note that we also took out these guys, these highs yesterday. We took out those guys. So we ran lower. We took out these equal lows. Took out the sell side. Then we had new equal highs formed 2 o'clock this morning. We took those out. We formed some more equal highs. We traded into an order block, which was inside of this 15-minute fair value gap. That got respected and price traded up, but did not take out the high. That was the first conclusion that I came to. That I initially wanted to see price trading up to this high, yesterday's high. But then I realized that long holders were profiting in here and they are just not going to be allowed to keep profiting in this without them being cleared. So price took these guys out. I personally am expecting price to go lower, trade into this fair value gap, possibly these equal lows. If it really wants to start getting animated, it could even go down as far as this 15-minute wick consequent encroachment level. And if you look at this bear flag, this not bear flag, bull flag pattern, holding pattern, right? People would take the flag pole and extend that up. But I would be taking this and I would be looking for a move down lower, not extending it up. So we can see that if I take that and we'll look at extending this pole down, if we run half a deviation down, that clears this low. And look at how, yeah, that will clear this low if we run down half a deviation. And that would also be halfway between these points, right about almost halfway between those points, below all these relative equal lows. So this would be a great first partial. %50 of the range, we have a fair value gap. That would be a beautiful partial as well. A nice discount level for price to trade down into this. And then we have halfway between half a deviation and a full deviation down, we have the consequent encroachment of this wick. We have that level lining up right there. So that would be another excellent area to for price to trade down to. Now, if I pull a fib on this wick and I apply quadrant levels, then we can see that 25% would be right there. That would be lining up with half a deviation down. So this would be another really nice area to take something out of the board or for price to trade down there. And if it trades down into that and it fails to trade any lower, then we know that it's highly bullish. And if it's going to fail to trade down lower than that, then we could expect price from that point onwards to take off. Now, with this situation in play, I'm able to see both sides. I can see prices trading off higher in the NAS, and I can see prices trading off lower in the NAS. So this is just an area where you have to sit in your hands. You got to wait for price. Price has to take out either side. It's either going to have to trade down lower, which I think that trading down lower is going to be a perfect opportunity for price to take out everybody that's been long, everybody that's profiting from this run up higher, take them out. And then from there on, we could see prices trading off higher. So that just lines up with the midweek reversal profile as well, which would send prices possibly lower for the AM session. And perhaps we could see prices resume trading higher on the PM session, or we could possibly see PM be a continuation down lower. Now, as far as Thursday, I don't really expect much. There's not a lot of high impact news left, and there's not much left on Friday either. Perhaps Friday could be a reversal setup counter to the week's direction. What I believe is going to happen Thursday, I want to say that it's going to be a continuation of today's price action, but it's just too early to make any final decision before we get that CPI release. If we can get that CPI release and we could stab lower, this fair value gap right here is a beautiful place for it to stop in its tracks. And from there on, we could then trade up higher. So that's something that I'm looking at. That's something that I'm thinking about. And it keeps me on my toes, especially in these types of market conditions where it's just in the middle of no man's land. It's not doing anything significant in here. However, if the dollar index can pose a solid closure below this daily week consequent encroachments. And this could be on the basis of a close. It's going to have to be on the basis of a 15-minute closure. Could even be a 1 hour closure, but preferably it would be a 15-minute candle closure. And we could see some sort of a gap form over here. And price come back into this gap, and then from that point on, we would have to be focusing on that gap and see how price trades around that level. If the gap would then stay in place and price retests that and from there on rejects and goes lower, then obviously we would then negate the whole idea of the NAS then seeking lower prices. Then we would be looking for higher prices in NAS. But however, if dollar gives us a fair value gap and it trades through that fair value gap, comes back above it, trades back down into it, and rejects trading higher, then we would be looking for potential higher prices. So we just have to wait and see in these environments what the market does, and we can start applying some filters in price to see which side of the PD array matrix the market is respecting, and we can start forming some sort of an idea around that specific result. So it's a game of patience. You have to wait. You got to see what it does. We can even go down into a 5-minute, and we could use this. This would be the perfect example here. If I use this as a gap, and if price trades back into this and trades down off lower, then I know that we would likely target this remaining liquidity below and this all low. But if it fails to do so and it trades back above this, retests it and sends it higher, then we have a lot of confluences because we have this weekly inversion high as well as this daily week consequent encroachment level right there. All of that's right over here. So if it trades up, trades back into this, and it wants to fly off higher, this would be a perfect market maker buy model. That would be beautiful with equal highs resting right above us. So I can see both sides at this moment. So I just have to be patient and sit and wait. And hopefully this will be helpful to some of you if you come into the situation where you can see both sides of the marketplace. And that's when you have to put your foot on the brakes and you got to stop and you got to take a step back and you need to wait for price to give you more information before you can proceed. And at this moment, I can see that the NAS is just being held in holding pattern over here. It's not doing anything. It's sitting in the middle of nowhere. ES, same thing. Look at this. You don't want to be in this. It's high resistance liquidity runs. The same thing can be seen on the Dow. So this is just no man's land right now. You don't want to be in this. You want to, most likely it's going to be a better play if we wait for CPI to pass and wait for 9:30 opening. Look what's available on the board, then look what it has done during the CPI release and see what we can frame from then on. Or it would be a good idea to wait for that first 30 minutes to play out and wait for 10 to 11. Look at the silver bullet and see what price has done around the 9:30 opening. Look at the regular trading hour gap. Look what that is doing, and perhaps that would provide some aid as to where price will go. Hopefully you have found this one insightful, and until we speak again, be safe.